In this video, we're going to be backtesting together on the New Zealand yen pair. I'm going to be showing you the fastest way to backtest and how I actually do my backtesting while we backtest the last 6 months of data together. So we're going to be starting off near April. Right now it's October of 2021. We're going to start off with April of 2021. And first off, I'm going to go ahead and put the rules on the screen. Screenshot this if you would like to, write them down if you need to, do whatever you got to do so that you understand the rules as we go through this process, because these will not be on the chart while I'm going through the process. I have these rules memorized, and by the time you're doing your backtesting, you may need to have these beside you because you may not have the rules memorized yet. So with that being the case, let's move that out of the way and go ahead and get started. So when doing backtesting, I point out my wins and losses exactly like we talked about in the last couple of videos. Right now, as I do this pretty quickly, so try to keep up, and I'm not gonna go super fast at first, but this is going to get pretty fast as we move along. Right now, can you see an entry? We have our push up, a higher high, we have a pullback of what? More than 2 candles. Did we get a break above the previous high? Yes, we did. Do we have an advanced engulfing entry? Yes, we do. Right here is that entry above the 50-period moving average. Did we have any candles close below the 50-period moving average? As you can tell, all of our rules are met. Again, keep those rules beside you if you have to, but I can tell all these rules are met, and I can also tell just by looking at this that I hit a 1-to-1 reward to risk ratio. With that being the case, I'm just going to go ahead and plot a green line on the chart for a win. Now, again, you may go a little bit slower. You may not be able to tell quite yet that this was a win. You may have to actually get your position tool out. And these are all things you can do if you want to, but I'm showing you the fastest way for me personally to backtest. If I see anything that looks extremely obvious, it definitely won, I just place a I place a vertical line on the chart at that exact point. I know for a fact this was a winning trade. So I'm going to go ahead and place that vertical line right there. As we continue, I'm just going to continue looking for possible entries. I'm not seeing any. And just as a good teachable moment, why was this not an entry? For one, we closed above the bodies of this previous high. For number two, it was not the swing low of the pullback. All of those make it not a valid entry. And I'll go through a couple of teaching moments while we do this as well. But for the most part, I'm literally just going to be backtesting as fast as I normally do. Right here, is this an entry? Yes, it is. We have a new lower low. From our swing low, we have more than 2 candles pulling back. We have a 1, 2, 3 engulfing candle, and all of this is happening below the 50-period moving average. With that being the case, we have a valid entry. I can tell that it wins at least a 1-to-1. I'm putting a green line there. And just to give you an example of this, the ATR is 23. 23 plus 5 is 28. I can tell this went more than 28 pips. It went about 35 pips. So I know for a fact that this trade won at least at a 1-to-1. Now I have to wait on either a lower low, or actually that's what I have to wait on, is a lower low than the previous low right here in order to place another trade, in order to start looking for more bearish trades. There we have a lower low, but after this lower low, we do not get anything that matches our rule criteria. We do have a pullback up to a high and a 1, 2, 3 engulfing candle, but one thing being wrong with this situation, there's not 2 green candles in the pullback. What else is wrong with this situation? The body of our entry candle closes below the bodies of our swing low candles. With that being the case, this is not an entry. So I'm gonna go ahead and delete this line, and we're gonna move forward here. Pushing forward, do you see an entry anywhere? Me neither. Still don't see one. Still don't see one. Now we're looking for bearish entries. Why would this not be an entry? Because we have more than 1 candle closing below the 50-period moving average. Let's keep going here. Why would this not be an entry? Here we only have 1 candle closing below the 50-period moving average, and we have a 1, 2, 3 engulfing. So what's the problem here? Well, we never made a new higher high. We come from this high, we pull back. In order to start looking for trades after we pull back all the way to the 50-period moving average, we need a new high to be created. This is not a new high right here. This is a lower high. We don't trade after lower highs. So let's keep going. Here we have a possible entry, right? Do we have a lower low? Yes, we do. Do we have 2 candles in the pullback that are green? Yes, we do. Do we have a 1, 2, 3 engulfing candle below the 50-period moving average? Yes, we do. Therefore, I can tell this trade lost. Again, just like for wins, I go through this process when I don't have to explain it really quickly. I just look for my wins and losses. If I can tell it's a loss, I'm not going to bring out my ruler or my position tool. That's obviously a loss. The market didn't even go down after my entry candle. Therefore, I'm going to keep moving forward. And if we keep moving forward here, we do not have an entry because it's not an engulfing candle. So we keep moving forward, Keep moving forward. And here, do we have an entry? Hopefully you were able to say yes. The reason being, new swing high, more than 2 candles in the pullback. We come down to the 50 period moving average, create this 1, 2, 3 engulfing candle. Let's move the market forward. Here I can tell this was a loss. There's no way this hit a 1-to-1 reward to risk ratio, so I'm going to put a red line on the chart. Moving forward and continuing to move forward here. Was this a win or a loss? Again, I do this really, really quickly. So the market pushes up to a high, pulls back, gives me a 1, 2, 3 engulfing after more than a 2 candle pullback, all above the 50 period moving average, and it immediately takes off to the downside. That's obviously a losing trade, right? So we have to put a loss there. Let's keep going. Is this trade a second chance entry? Hopefully you said no. The reason being, more than 2 candles, or more than 1 candle, it being 2 candles here, closed below the 50 period moving average. One thing that I do want to explain as well is that we have to have a color change. That's the reason this is not an entry. This candle has a bigger body than this candle, but this is a green doji. I can't have an engulfing candle after a green candle to the bullish direction. I need a color change. This would have needed to be red. And if it was red, this would have been a valid entry. Let's keep pushing forward here. Is this a valid entry? And again, guys, I'm just trying to get you accustomed to the rules even more throughout this backtesting process, where I can point out trades and tell you the reasons they were or were not entries. That, I think, will help you tremendously in your own backtesting process. This would not be valid because of the fact we closed below the bodies of the previous swing low candles, therefore not an entry we take. Pushing forward, pushing forward. Why would this not be an entry? Same thing as earlier, right? We have a push up to a swing high, a pullback, a push up to a lower high. With this being a lower high, we're not taking an entry after a lower high. Therefore, this would not be a valid entry. Pushing forward here, no entry. I bet you can guess why. We closed below the bodies of the previous lows. As we push forward, we have no other possible entries in this scenario either. And we continue looking, we continue looking. This is quite a slow process, guys, especially when I'm trying to explain things. But let's see if you can point out the entry here. Do we have a swing high? Yes, we do. From our swing high, do we have at least 2 red candles in the pullback? Yes, we do. Do we have an advanced engulfing entry? 1, 2, 3. Yes, we do. With this candle here, does this candle close above the highs or the bodies of the previous swing high? No, it does not. As you can see here, we have space. Therefore, this is a valid trade. I can tell that that trade hit a 1-to-1 reward to risk ratio. So I'm going to put a green line there. And I'm not going over to the spreadsheet every time because of what I showed you in the last video. It's super easy for me just to back it up, put my spreadsheet right here in this area, right here, and type in the numbers that I see and whether the trade was a win or a loss after the fact. So I'm just pointing out wins and losses first. This is my preferred way to backtest. You feel free to backtest in any way you would like, but I do want to give you my preferred way and what I consider to be the best and fastest way to backtest a trading strategy. In through here, did we get any trades during this pullback? Hopefully you said no. Here's the reason. We have no trades through here, and this low is higher than this low. Remember, our actual trade entry must come from the lowest low of the pullback, considering that this low was higher, or it was lower, not higher, was lower than this low. That means that this is the swing low of the pullback. This is not. And our entry candle, this one here, must follow the swing low of the pullback. So since that's not the case, that was not an entry. And all through here, we don't get any type of entry from this swing low, or this swing low. So with that being the case, we don't have a valid entry through that area. Let's keep pushing forward here. No entries until when? Is this an entry? We have our push down into new lows. We have a pullback that consists of way more than 2 green candles. Again, guys, we can have these green candles broken up in between here with red candles, and that's totally fine. That does not matter at all as long as from our swing low, we have more than 2 green candles in the pullback, or more than 1 green candle. 2 is the minimum. So since we have that, we're just looking for an engulfing candle that matches our criteria. And is this an engulfing candle that matches our criteria? Yes, it is. It happens as a 1, 2, 3 engulfing candle, everything happening below the 50 period moving average. With that being the case, I can tell this is an actual trade I would place. And with the case being that we pushed down so far, I can tell that's a winning trade. I'm going to put a green arrow there. Do we get a new low? Yes, we do have a new low here. So we're now looking for more bearish trades. This obviously would not be a bearish trade. Why is this not a bearish trade? One, it's not coming from the swing high of the pullback. Two, we close below the bodies of the swing low. With those two things coming together, that makes this invalid, not a valid trade. So as we push lower, do we have any other trades? We push lower here. We pull back. Swing high engulfing candle. Does this look like it won or it lost? I can tell by looking at how far price went up that this lost. So I'm going to go ahead and place a red arrow on the next candle. That's something I haven't been doing, guys, but instead of putting the vertical line on the entry candle, it needs to be on the next candle. I'll go back and change that before we put these numbers in the spreadsheet, but for now, let's continue going. Do you see anything else interesting about the chart right now after this entry? Let's say we take this entry, we get stopped out right here. Is there anything else we can do that we can trade afterwards? Yes, there is. It's called our second chance entry, and it's happening right here. After we lose a trade, there's only two ways that we can possibly trade again. After a loss, we either need to push up high enough to hit the 50-period moving average, and then all of our other rules also need to be met. We need to have a candle that is or directly follows the swing high of the pullback, and we need to have an advanced engulfing entry being either the 1, 2, 3 entry or the swing high engulfing candle. But if all of that comes together, we have a valid second chance entry. And since it does right here, I can tell that's a valid second chance entry. And I can also tell based on the next price that happens that it's a winning trade with at least a 1-to-1 reward to risk ratio. As we push down, do we get a new lower low? Yes, we do. Since we don't have to have a close below and we just look for the wicks of the candles, we have a new lower low here. After that new lower low, do we get a 2-candle pullback? Yes, we do. Do we have an engulfing candle? Yes, we do. Let's zoom in here to ensure that this candle did not close below the bodies of the previous swing low. And right there we go. As you can see, there is space here. As I said, I am exact with my rules. If there's space, I take the trade. We did not close below the bodies of the previous swing low. With that being the case and all the other factors coming together for my strategy, I have a winning trade. Next up, we're going to continue pushing down. We're going to speed up a bit here. Do we have a trade here? Nope. 1, 2 pullback, but close is below the bodies of the swing low. With that being the case, there's no trade there. The next trade I see is where? Hopefully you pointed this out. As we push lower to a low, we pull back by more than 2 candles and we get a 1, 2, 3 engulfing pattern. This creates a losing trade. I can tell it's a losing trade because price just continued higher. And do we have another chance to enter a trade after this trade? So this trade loses. How else can we enter a trade? We just now looked at this. After this loss, we can enter again if price touches the 50 EMA and only has 1 candle that closes above the 50 EMA. We can't see 2 candles, but as long as we see less than 2 candles close above the 50 EMA, we can enter again on an advanced engulfing entry for our second chance entry. In this case, our 1, 2, 3 candle second chance entry ended up being another loss. This will happen from time to time. As with any other strategy, we're going to have wins and losses, and our entire point is to have a bigger winning percentage with a 1-to-1 reward to risk ratio over a large sample size, and then we can optimize from there. As we push forward, do you see anything that could be a valid entry? This cannot because it closes above the highs of the bodies over here, or the bodies of the swing high candles. So we keep pushing forward. No entry, no entry, no entry, no entry. Is this an entry? Hopefully you said no. The reason is this is not a proper engulfing candle. The close of our red candle is above the open of our green candle. With that being the case, this body is smaller than the previous body and we do not have an engulfing candle. Continuing to push forward here, is this a valid trade? Hopefully you said yes, but maybe you couldn't see that we did create a new high. Let's go ahead and put a horizontal line here so that you can see. I put a horizontal line on these highs because remember, in order to start placing trades after we have a pullback, we have to see a new high. Not a close above high, but a new high with the wicks. So since we have new highs, we can now look for more than a 2-candle pullback or more than a 1-candle pullback. Again, 2 candles is the minimum. We here have 3 candles as a pullback, and we have a 1, 2, 3 engulfing pattern, giving me what I need to enter this trade. And I can tell just by looking at the trade that this is in fact a winning trade. Again, guys, it's up to you. If you want to put a position tool here and count your pips on every single one of these, that's totally fine. I'm just showing you the fastest way to backtest, at least the fastest way that I've personally found to backtest, and how I personally backtest trading strategies. Here, do we have a trade? We push down, we have a low. Is this low lower than the previous low, which the previous low is right here? So yes, we have a new low. With that new low, what are we looking for? At least a 2 candle pullback and a 1, 2, 3 engulfing pattern. Do we get that? Yes, we do. All happening under the 50 EMA, and I can tell that trade won. And as we push forward, here comes one of the first circumstances where I really can't tell. What I mean by that is we push down, we have our low, we push up, we in fact get this little 1, 2, 3 engulfing candle setup. As you can tell, we are green candle here, engulfing candle here. It is the top of the swing high. So with all that coming together, I actually do need to bring out my ruler here. The ATR is 34 pips, which means I can do 34 plus 5, which is a 39 pip stop loss. And let's see if I get 39 pips here on the trade. Yeah, I do. This is about 42, 43 pips down to the low. Considering the spread on this pair is normally around 2 pips, I know that that likely, very, very likely, even with the spread, would have hit a 1-to-1 reward to risk ratio. So I can place a green candle there. Next up, do we have a second chance entry? By the way, if we win this trade, we can also still look for that second chance entry, which is the touch of the 50 EMA and our next engulfing candle. And since this trade won our 1-to-1 reward to risk ratio, now I can start looking for more trades. And also this meets the criteria of our second chance entry. And I know for a fact it would have hit a 1-to-1 reward to risk ratio. It's a 31 pip ATR, which means we add 5. So that's going to give me 36 pips. Obviously, we get enough to do a 1.6 or 1.7 here. So obviously we have enough for a 1-to-1. As we move forward, no bullish trades, we break back below. No bearish trades, we break back above. No bullish trades, we break back below. And we do eventually get a bearish trade right here. We have price pushing down. We have more than a 2 candle pullback. 1, 2 here on this green candle. And we have our engulfing candle here. That is a 1, 2, 3 candle. I can tell it's a losing trade. So therefore, I just put a red line on the chart. As we push higher, is this a good second chance entry? Hopefully you said no. We have 1, 2 green candles that close above the 50-period moving average, making this an invalid opportunity. As we push forward looking for bullish trades, do we have one? You may be thinking that this is a bullish trade, but there's a lot of reasons it's not. One, we have a close below the 50 right here with this red candle, and this green candle closes above the 50-period moving average. Therefore, I cannot look for more bullish trades once I have 2 closes below the 50-period moving average. But as we push forward and we create new highs, we do get a nice pullback 1, 2, 3 engulfing candle with only 1 close. Now, both of these bodies are touching the 50-period moving average. Let me make that clear. This is totally fine. This means this candle opened below the 50-period moving average, but it closed, as we can see, above the 50-period moving average. Therefore, we only have 1 close below the 50. So therefore, this is a valid trading opportunity, and this is too close for me to be able to call, so I need to actually measure it. What I'm going to do is 30 pips, which is the ATR. If you look over at the ATR right now, you can tell that's 30 pips. I'm going to add 5 to that because that's my rule, so I need a 35 pips, and right here we get up to about 40 pips. So I know that would have hit a 1-to-1 target easily. I can place a green line there and continue looking. As we continue, we have another trade that I can't really tell right here. The reason is because I can't tell if this would have hit a 1-to-1 or not. Probably not, but I'm going to measure it anyway. So anytime I'm even questioning it and it's not super obvious, I do bring out my measuring tool. We have 29 pips as the ATR, plus 5 is going to be 34. And we get about 26 here, so not enough to hit our targets. Therefore, we have a losing trade. And again, I'm going to go through and change these lines to the next candle because you're actually, even though I say we enter on the close of this candle, the close of this candle is the open of the next one. So the times we need to record is the next candle open. Let's continue. As we push forward, we get no bullish opportunities. We get no bearish opportunities. We get a bullish trade. Or do we? Do you see a bullish trade? Hopefully you do. We have this new high, more than 2 candle pullback, and a 1, 2, 3 engulfing candle right here. I can tell that this trade loses, but just for peace of mind, it's 25 plus 5. 25 is the ATR. That means a 30 pip stop loss, and it would have easily gotten hit. So therefore, losing trade. Do we have another opportunity to enter? Did any of you guys catch that mistake I just made? I always go through and double check my work. I normally do this during the optimization process, but since this is a video about backtesting the strategy, I want to make sure I get everything right the very first time. So as I was going through double checking my work, I realized I actually missed a winning trade. We go here from swing low up to, is this a swing high? Yes, it is. It's higher than the previous highs looking left. Do we have a 2 candle pullback? We do. Do we get an engulfing candle? We do. Is it a swing low engulfing candle? It is. So in this case, we have about a 23 pip ATR on this candle. So what we do is go from there, we add 5, which would be 28, and we have about a 30 pip or so up to the high. So this one would likely hit targets for a 1-to-1 reward to risk ratio. With that being the case, I have another winning trade there that I nearly missed. So it's always good to go back and double check your work. Again, I normally do this during the optimization process, but now that you know that this trade is going to be in the spreadsheet once we start plugging numbers in just a second. But let's jump back into the backtesting video right now. Hopefully you said yes. As we push down, we then touch the 50 period moving average. We only have one candle that closes below the 50 period moving average. This is the swing low of the overall pullback, and we have a 1, 2, 3 engulfing pattern. Therefore, this would be a valid entry, and I can tell based on price that it would have been a winning trade. So therefore, I'm going to put a green vertical line right there. We have no entry, no entry, no entry. The reason this is not an entry is because if I put a horizontal line at the lowest swing low of the pullback. So we have our pullback from here. This is the lowest swing low of the pullback. Remember, my entry candle must either be or directly follow the lowest swing low of the pullback. In this case, does that happen? If I zoom in, it's really easy to tell this is not the lowest low of the pullback because this is, and it does not follow the lowest low of the pullback because here's the lowest low of the pullback. And the next candle is not engulfing. Therefore, we do not have a bullish entry there. Let's continue looking. No bearish entries. And here we have our next bearish entry. We go down to a swing low, a couple of candles on this pullback. We have an engulfing candle that is valid as far as I know. Let's zoom in to make sure that our engulfing candle is in fact valid. And look at that, it's not. So therefore, we do not have a trade. And sometimes if they're really, really close, you will have to zoom in like this. Can you tell from here? If you can't tell by looking at it, look at the closing price of this candle, which you can see up here. This is the open, high, low, and close. O is open, high is H, low is L, and close is C. The open, high, low, close. Look at the open of this candle. If you ever have trouble with this, and the open of this candle was 74.974, and then look at the close of this candle. If it's not lower or the exact same price, then it is not an engulfing candle. So here we have 74.974 on our open. Here on our close, we have 74.976, which means it's a higher number than this number. And whenever I say close, guys, remember, we're looking at the close of the red candle and the open of the green candle, comparing those numbers. This needs to be lower if it's a bearish engulfing candle. It would need to be higher if it's a bullish engulfing candle. So there's a way to tell if something's actually an engulfing candle if you can't tell by looking. But in most cases, if you zoom in far enough, you will be able to tell, as you can tell here, that it's not an engulfing candle just by zooming in. But I did want to give you that little hint. So in this case, we do not have an entry, but we do see an entry where as we pull back, we get this 1, 2, actually we get a swing high, not a 1, 2, 3, swing high engulfing candle here, which would be a valid entry and looks to be a losing trade. So we have our losing trade there. Continue looking, continue looking. Is this a valid trade? It is not, for two reasons. Here's the swing low of our pullback. We don't have this candle as the lower low, and this candle's not a lower low. Also, we closed above our bodies of our swing high. Would this be an entry? Hopefully you said no. Again, guys, I want to make this as clear as possible, which is why I keep going over it. And the reason I keep going over it is because I have so many questions about this. From the swing high, we need our entry candle to either be or directly follow the lowest swing low of the pullback. Considering that that does not happen here, this is not a valid trade. So we don't have a valid entry there. See if you can point out the valid entry on the chart though. Hopefully you pointed right up here where we do have a new high compared to previous high. All of this is happening above the above the 50 EMA. And we have 1, 2, 3 candle pullback with a swing low engulfing candle there. So therefore we have a winning trade. I can tell by the way price moved afterwards, and I will put a green line right there. All right, guys, so we're getting close to present date, which means we're almost finished. Don't lose focus yet. This is an extremely important part of the training, so be sure to stick around with me as we start putting all of this into the spreadsheet. As we push lower, this would not be an entry. Why not? Here's the low of the pullback from swing high down to the lowest low is right here. Therefore, this candle did not come from the lowest low of the pullback and is not the lowest low of the pullback itself. But we do have a valid entry here that I can tell would have easily hit our first targets. I'll put a ruler tool on here just for peace of mind. This is 26 pips. The ATR is on this candle. So 26 plus 5 is 31. This gets up to about 40 pips. So I know it would have hit targets. Therefore, I put a green line on the chart. Here, do we have another entry? Yes, we do. We have well, it depends if we have a new high, right? So let's actually scope back, see if we get a new high here. We do not. So that was a good idea to scope back and look at this previous high, because if we look at this previous high, we do not get a new high out of price. Here's our previous high. As you can see, there is space between our previous high and this high. Therefore, this would not be a valid trading opportunity because it's coming from a lower high. Let's go ahead and continue pushing forward here. Do we have another trade? This is not an engulfing candle, therefore not a trade. This is an engulfing candle and does not close below the previous swing low bodies. Therefore, this is a valid trade. I do need to bring my ruler tool on here. 33 pips is the ATR, plus 5 would be a 38 pip. And we have 47, so therefore 48 pip target. Sorry, I forgot to say target. And we have 47 there, so that obviously would have hit our first targets. Pushing forward now, we see no more bearish setups. We see no bullish setups here. Continue pushing forward. We see a bearish engulfing candle here, but it closes below the swing lows of this first swing low, the bodies of that first swing low, therefore not an entry. This, though, is an entry because we have a lower low followed by a pullback and our 1, 2, 3 engulfing candle. I can tell that that is a losing entry, so I'll place a red line there. And I'm going to scoot my lines over so it saves me a little time doing that before we look at placing all of these into the spreadsheets. Here, is this a second chance entry? I'm trying to burn this in your mind, guys. Hopefully you said no, because 1, 2 candles close above the 50 period moving average. Therefore, that would not be a second chance entry. And now let's continue moving forward. Holy shit, we finally finished. I know that that seemed like a really long process, but you'll be able to do it much faster because you will not be explaining the strategy as you do it, which is what took the longest amount of times. But right now, I'm going to go through and move all my lines over one that need to be moved over so that we can start placing all of these trades into a spreadsheet together. Let's go ahead and begin placing these trades in the spreadsheet. We're going to do so first with a 1-to-1 because, again, once you have all of these placed in a spreadsheet, it's super easy to optimize, and that's something we're going to talk about in the next couple of videos. But right now, as you can see, we have some like jumbled up stuff right here. So whenever I'm placing trades into the spreadsheet, this is how I do it. I go to a point zoomed in so far that nothing is jumbled up. At this point, I can see all these numbers and the trades very easily. Then I just bring up the spreadsheet I'm going to use. I type in the pair, which is the New Zealand yen, and New Zealand yen. Then I'm just going to drag these down in order to quickly copy and paste them. That way I don't have to. And now I can start typing in my actual trades. So the way I do this is super simple. I type in the time first, so I have 1700. And then I hit enter. And then I type in the next time, which is 1 o'clock. Then I hit enter. And all I'm doing, guys, is I'm looking at this number right here on each of these. And I'm going to type in all the times first. And then I'm going to type in, after getting all the times, I'm going to type in all the dates. And then after I type in all the dates, I'm going to go through and say whether or not they won or lost. So let's go ahead and do that. We're going with times. We're on 1 o'clock. We next have 9 o'clock, then 2100. So 9 o'clock, 2100. Then we have 5 o'clock and 1 o'clock, 5, 1, and finally we have 1700. Okay, so that's all my times. Next up, I'm gonna do dates. So now I'm going from 3:30 right over here to 4:09 to 4:23. So I know that 3:30, 4:09, 4:23. Then I have 5:02. Then I have 5:11. Hey, that's my height. Then I have 5:27. Then I have 6:07. At this point, I have all my dates in. And what I can also do, since I know this is the way I personally am going to be taking stops and targets, I'm not putting the exact pip amount. I'm just using the ones like we talked about in the last video. So I'm just going to copy this down as well so that I don't have to keep typing in ones, just to save on a little bit of time. And then I can go through and name whether or not they won or lost. And this is how fast I do that. I can tell I'm 2 greens, 3 reds, and 2 greens. And there we go. Now I have all of these in the spreadsheet. And that's the way I do things extremely quickly. It's just by typing in the time, then typing in the date, then typing in whether the trade won or lost, and going ahead and copy and pasting my pair and my stop loss set to 1, because that's how I set stop losses in my spreadsheet. So now I can just go like that, scoot over. I know I stopped at 6-7 right there, and I can zoom in until things are not bunched up anymore. So something like that right there is very easy for me to see. So this is going to be my next section. I just bring my spreadsheet back up at this point, and I start typing in the times. I have a 5 o'clock starting from my red, and then I have another 5 o'clock, and then I have another 5 o'clock. A lot of 5 o'clock trades throughout this section. Then I have a 2100, then I have another 2100, and then I have a 1300 and a 1300. A lot of doubles here, and a 1 o'clock next time. So there we have it. I have all of my times in. Now I'm going to do dates. The date is 6:14 on the first trade, 6:15 on the next trade, 6:17 on the next trade, 6:21, then 6:22, and then 7:05, and 7:07, and 7:12. At this point, I have all those in. All I got to do is do my reds and greens, which is super easy. -1, -1, -1, -1, -1, 1, 1, 1. There we go. And it's in the spreadsheet. I just do this process over and over. I'll keep doing it with you guys. Since this is the We Backtest Together part of the course, I'm going to actually do everything with you. So we'll just scoot over from 7:12 was our last trade. So I'm going to go to 7:13. And at this point, I can see all the trades very easily. So I can go ahead and bring my spreadsheet back up again. And I just repeat this process, guys. I can see that I started at 5 o'clock on 7:13. Then we went to 1 o'clock on the next trade. Then we went to 9 o'clock on the next trade. Then we went to 1 o'clock on the next trade. Very monotonous, but this is just part of manually entering these trades in a spreadsheet. It's not the most fun thing in the world, but it is absolutely, positively necessary. Not everything about trading is fun, and not everything is just about making money. This is the process we must go through before we can ever make money, is gathering statistical data and then optimizing for the best way to trade a specific strategy. And 8, 10. I messed up a little bit on the first few. I had to go back and double check and redo it, but you get the point. So after redoing it, now we have 1 win, 1 loss, 1 win, 1 loss, 1 win, 1 loss, 1 win. Awesome. Let's go to the next one. Moving on to the next section, I can tell that I can actually zoom out here and maybe get a couple more. So I'm going to do some zooming out. Okay, I can get my last 5 trades in right here. Let's go ahead and do that. With starting with the times, 1700, followed by 5 o'clock, followed by 1 o'clock, followed by 9 o'clock, followed by 2100. Then I can do my dates, which is 8:23, 8:30, 9:10, 9:12. That dyslexia keeping in. Nope, it's not 9:12, it's 9:21. I swear, dyslexia keeps kicking in on me today. And then 10-3. There we go. Now we can just type in our wins and losses, which is a -1, 1, 1, 1, -1. Awesome. Now we have all of our data for the New Zealand yen for the past 6 months in our spreadsheet. We can see that we ended up with about a 60% chance to win throughout these trades specifically, which is really cool. That's a great thing to see. We had a almost 10% total gain with about a 6% drawdown. I'm completely comfortable with those numbers. So this is how we would go about just back testing the most simplistic form of the strategy with a 1-to-1 reward to risk. Again, we'll go through and optimize for different targets. That way you can shape these strategies to your own trading personality. Obviously, if you want the highest winning percentage, you'll have to go with a 1-to-1 reward to risk ratio. If you don't care about win percentage as much, then you may want to go with a higher than 1-to-1 reward to risk ratio. That is completely up to you. And I have no clue why. Oh, that's why I was saying that. Okay, that's at 1.3 and it really confused me for a second. But at this point, we have everything right in the spreadsheet. You can see we had 16 wins and 11 losses. And this actually, if I go over to my all the way tested data on the New Zealand yen, which is right here, coincides well with what I got within the last 100 trades. So on the New Zealand yen, within the last 100 trades, we had 59 wins and 41 losses, which gave us a 36% ROI using a 2% risk. And also keep in mind, guys, this is just one currency pair over those 6 months, and we're going to be trading 3 different currency pairs with this strategy. And this is also just one of the 2 strategies we're going to be trading. So these numbers are going to look a lot different when you combine everything into a spreadsheet, which is something we're going to do in later videos. For now, and now that you know exactly how I backtest and input my backtesting data on the 50 EMAP strategy, we're gonna go ahead and move on now, and we're gonna backtest the 20 EMAR strategy together in the same exact way. After that, the really cool stuff, we're gonna move on to physically optimizing these trading strategies. I'll see you guys in the next video.